Welcome to your first solo bank account, independence and privacy. In this video, we will walk through how to safely separate from joint or linked accounts and open your own account for full financial independence. First, I will explain why switching institutions matters for privacy. Then, I will show you the documents you need, the exact steps to open an account, and how to update direct deposit immediately. Finally, I will leave you with a practical checklist, a comparison of bank versus credit union, and a quick quiz to test your knowledge. Let's begin. Here is the agenda. First, why switching institutions protects your privacy. Second, the documents you need. Third, the step-by-step opening process. Fourth, a direct deposit strategy you should implement immediately. Fifth, fees to watch and where to bank, including banks versus credit unions. Sixth, key takeaways and short quizzes. With that roadmap in mind, let's move forward. Before we proceed, a quick disclaimer. This content is for educational purposes only and is not financial, legal, or tax advice. Regulations and policies vary by country, state, and institution. If you are a minor or have legal constraints, you may need a guardian or a specific type of account. Always verify requirements with your chosen bank or credit union and consult a qualified professional for your specific circumstances. With that clarified, let's move on. Let's start with why you should switch institutions. If you separate from a joint or linked account but stay with the same bank, internal systems or human error can sometimes lead to unintended linkages or information sharing with previous joint account holders. Even if policies dictate separation, practical realities can cause mistakes. Therefore, for guaranteed security and peace of mind, experts recommend opening your new account at a completely different institution, either a competitor bank or a local credit union. Now that we understand the why, let's illustrate the risk. This flowchart shows the risk pathway. If you remain at the same bank, the shared core systems can leave residual links. Human error by a teller or support agent may cause incomplete updates. Internal data replication can also produce back-end mislinks. These issues funnel into accidental information sharing, which effectively creates a privacy breach risk. By contrast, switching to a different bank or a local credit union creates a clean separation. Consequently, the strongest move for privacy is to choose a new institution. Next, let's prepare the documents you will need. To open your new account, you will need standard Know Your Customer documents. First, bring a valid government-issued ID. Second, provide proof of address, such as a recent piece of mail or a utility bill. Third, have your social security number ready, or your local equivalent where applicable. Fourth, ensure you meet the minimum opening deposit requirement, which varies by institution. Having these ready before you start will save time. Now that we have the documents, let's choose where to bank. When choosing where to bank, prioritize privacy by selecting a new institution. Compare fees for maintenance, overdrafts, and out-of-network ATM withdrawals. Evaluate the mobile app, online banking features, and ATM networks you can use without fees. Consider support hours and branch availability if you prefer in-person service. Credit unions often provide lower fees and a community focus, while large national banks may deliver robust tech features and extensive ATM or branch networks. With your choice in mind, let's visualize the entire opening process. This process map walks through the journey from research to completion. You begin by researching institutions and comparing fees and features, then selecting either a bank or a credit union. Next, you gather your KYC documents and apply online or visit a branch. After identity verification, you fund the minimum opening deposit and receive your account and routing numbers. You then activate your debit card and mobile app, set alerts and security features, update your employer's direct deposit, and monitor your first deposits. Finally, you decide whether to close the old account or leave it dormant based on any pending transactions or practical considerations. Now, let's break these steps into a clear, practical sequence you can follow today. Here are the actionable steps. First, choose a new institution, bank or credit union, to ensure a clean break. Second, submit your application online or schedule an in-branch visit. Third, upload or present your government ID and proof of address, and enter your social security number for identity verification. Fourth, fund the minimum opening deposit to activate the account. Fifth, receive your routing and account numbers, then immediately enroll in mobile banking for quick access. Sixth, turn on security features, including biometric login, transaction alerts, and two-factor authentication. Seventh, Order or activate your debit card. Next, let's move quickly to paycheck planning, because timing matters. Do not wait for your next payday. As soon as your new account is established and you have routing and account numbers, submit updated direct deposit details to your employer. Ask HR or payroll about cutoff dates so you do not miss the next pay cycle. Watch for your first deposit into the new account and verify that it fully posts. Then, migrate bill autopays and subscriptions carefully to avoid missed payments. Keep a small buffer in the old account until you confirm every deposit and autopay has successfully moved. After all activity settles, you can close the old account or leave it dormant, depending on any outstanding considerations. Now that cash flow is addressed, let's examine common fees. Here are common fees to watch. Monthly maintenance fees can often be avoided by selecting a no-fee account or meeting balance or activity requirements. Out-of-network ATM fees are minimized by using partner machines or selecting institutions that reimburse ATM fees. Overdraft and non-sufficient funds fees can be reduced by enabling low-balance alerts, linking a savings account for overdraft protection, or opting out of overdraft programs. Wire and transfer fees may be avoided by using ACH or fee-free methods when appropriate. Paper statement fees can be eliminated by opting for electronic statements. With fees in mind, let's compare banks and credit unions. On the left, traditional banks typically offer broad ATM and branch networks, sophisticated mobile apps, and occasional promotional bonuses. However, they may charge higher fees. On the right, credit unions tend to provide lower fees and a member-focused culture, often with strong community programs. Their networks may be smaller, though shared branching and cooperative ATM networks can reduce that limitation. As you weigh options, match your priorities, privacy, costs, technology, and convenience, to the institution that best aligns with your needs. Next, let's visualize a simple starter budget to stabilize your new account. This pie chart illustrates a sample starting budget. 50% for essentials such as rent, utilities, and groceries. 20% for savings to build an emergency fund and future goals. 25% for wants, the discretionary category, and 5% as a buffer to absorb small surprises. While your exact percentages may differ, allocating intentionally helps you maintain stability as you transition to a new account. Now let's test your understanding with a quick quiz. Quiz time. For maximum privacy when separating from a joint or linked account, what is the best move? Option A. Stay with the same bank, but request a new account. Option B. Open at a completely different bank or credit union. Option C. Keep using the joint account and change the password. Option D. Close all accounts and hold only cash. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is B. Open at a completely different bank or credit union. This approach creates a clean break and minimizes risks from internal systems or human error that might otherwise link your new account to the old relationship. Second quiz. Which set of documents is typically required to open a new account? Option A. Student ID, lease agreement, and passport photo. Option B. Government-issued ID, proof of address, and social security number. Option C. Credit score printout and 2 references. Option D. Pay stub and letter from employer. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is B. Government-issued ID, proof of address, and social security number. These are standard Know Your Customer requirements across most banks and credit unions. While details can vary by region and institution, this trio is most commonly requested. Here are some actionable pro tips. First, open now rather than later. The process typically takes 15 minutes to an hour in person and can be even faster online. Second, immediately turn on security. Enable 2-factor authentication, set transaction alerts, and use biometric logins where available. Third, move your auto-pays methodically. Create a checklist of all subscriptions and billers, note due dates, and verify each transition. Fourth, keep a temporary cushion in the old account until you are certain all deposits and auto-pays have successfully moved. With these tips in place, let's consolidate the key points. These are the key takeaways. First, switch institutions to protect your privacy. Second, prepare your government-issued ID, proof of address, and social security number. Third, open your new account now and update direct deposit immediately. Fourth, verify your first payroll hits your new account before closing the old one. Fifth, watch fees and choose between a bank or a credit union based on your needs and priorities. Next, let's summarize the journey and close out. To wrap up, you can open a solo account in under an hour, often faster online. Your privacy is strongest when you switch to a different institution from any previous joint or linked accounts. Update your employer's direct deposit immediately and verify the first payroll before closing the old account. Finally, fees and features vary widely, so select the bank or credit union that best fits your needs. With that, you are ready to take full control of your finances. Thank you for watching. If this video helped, please like, share, and subscribe for more practical guides. In the comments, let us know which institution you chose and why, along with any tips you discovered during your account switch. Your experience can help others. See you in the next video.